Hey there, and welcome to L. Harris Media. Let's talk about call options and put options. If those terms have ever left you scratching your head, you're not alone. But don't worry, by the end of this video, these concepts will make total sense. Stick around, because not only will you understand how call and put options work, but you'll also learn the risks, rewards, and a few tips to avoid common beginner mistakes. And as always, we'll keep it light because finance doesn't have to be boring. All right, let's dive in. A call option is pretty simple once you break it down. It gives you the right, but not the obligation, to buy a stock at a specific price, called the strike price, before a certain date. Here's an example. Let's say you think Apple stock, currently priced at 150, is going to skyrocket. Instead of buying the stock outright, you purchase a call option with a strike price of $160 and you pay a small fee, called the premium. If Apple stock rises to $200, you can buy it at $160 and sell it for $200. That's a $40 profit per share minus the premium you paid. Not bad, right? But here's the catch. If Apple stock doesn't rise above $160 before the option expires, your option is worthless. You lose the premium. That's why it's called an option. You're not obligated to buy, but you don't get your premium back either. Think of it like reserving a hot concert ticket. You're locking in today's price, hoping demand and the ticket's value goes up. Now let's flip it and talk about put options. A put option is like insurance. It gives you the right to sell a stock at a specific price before a certain date, even if the stock's market price tanks. For example, say Tesla is trading at $200 and you're nervous it could drop to $150. You buy a put option with a strike price of $190. If Tesla falls to $150, you can still sell it for $190, saving yourself from a big loss. It's kind of like car insurance. You pay a premium up front so that if something goes wrong, you're covered. Now that we've got the basics of call and put options down, let's talk about the risks and rewards. Options trading can be exciting because you can make significant profits with a small upfront cost. But there's a big risk. If the stock doesn't move the way you expect, you could lose your entire premium. For call options, the stock needs to rise above the strike price. For put options, it needs to fall below the strike price, and it needs to do this before the expiration date. If it doesn't, you're out of luck and out of money. That's why it's crucial to only trade with money you can afford to lose, and take the time to fully understand what you're getting into. All right, so what are some common mistakes to avoid when starting out? First, a lot of beginners don't pay attention to the expiration date. Options have a time limit. If the stock doesn't move in your favor before the option expires, you lose the premium, no matter how close it gets. Second, there's over-leveraging. Options can seem cheap compared to buying stocks outright, so it's tempting to buy a lot of contracts. But if the trade doesn't go your way, those small premiums add up fast. And finally, there's misunderstanding volatility. Just because a stock moves doesn't mean you'll profit. The move has to be big enough to cover your premium and leave room for a profit. So how do you get started with options trading? The good news is it's easier than ever. Most broker platforms, like Robinhood, E-Trade, or TD Ameritrade, have tools designed for beginners. Open an account, start small, and if you're brand new to this, consider using a paper trading account to practice before risking real money. Remember, options trading isn't about gambling, it's about strategy. Take your time, research your trades, and don't feel pressured to dive in head first. And there you have it. Call options let you bet on a stock going up, put options help you protect against a stock going down, and both come with risks and rewards. If this video helped you finally understand call and put options, do me a favor. Hit that like button and subscribe to the channel for more beginner-friendly finance videos. Got questions or want me to cover another topic? Drop a comment below. Thanks for watching, and I'll see you in the next video. Until then, happy investing!